today's business brief, we're joined by Peter Switzer from money website switzer.com.au. Peter, as always, good to see you. Got to ask you about the G20 first of all. We've seen Scott Morrison and Donald Trump meet on the sidelines, but it will be all about Xi Jinping, won't it?
Yeah, without a doubt. And the markets still have the belief that a trade deal is nigh. But I guess if they really believe it's going to happen this weekend, the markets, Wall Street would be up. The Dow Jones is only down 10 points. So you can see, so they're betting that a trade deal will eventually happen. But it's so important, Laura, because you think this is just a battle between two bully boys in Trump and Xi. But the bottom line is, if we get a trade deal, stocks go up. Let me just read this quickly. Let's knock this up. Stocks go up, growth goes up, there's less rate cuts, confidence goes up, jobs up, superannuation up because that's linked to stocks, house prices up, you'll love that, the budget surplus goes up here, and also Trump gets up in 2020 at the election. So there's so much riding on this, and when Trump decides to actually make it happen is just, I guess, the anxiety thing we have to wait to see when it actually shows. Yeah, absolutely. And we have seen, some, I guess, short-term benefits for Australia with this trade war ongoing, but obviously no one's advocating for that. Interesting to see, all the economic indicators we have at home. The RBA is going to meet again next week. Didn't that come around quickly? And there could be the first back-to-back rate cut in about a decade. But I don't understand really why all these levers are being pulled on, the monetary ones. Of course, Philip Lowe is begging the government to pull on the fiscal levers, but surely they're not having that much of an effect, are they? It doesn't seem like it. No, see, the big problem is that look, you could go for tax cuts, but then the government would have to, in a sense, do a mini budget to do so. Infrastructure spending is a great idea, but it's never shovel-ready. It always takes time to get infrastructure things in place. And you're right, I don't think interest rate cuts are going to have a big effect. They'll have a bit of effect. Anyone who's got mortgage stress will have less mortgage stress. Anyone who's forced to go off interest-only loans will go off onto lower interest rate principal and interest loans. So all those things are going to be better for the economy, but they won't result in a big turnaround like tax cuts would, bigger tax cuts, and also infrastructure spending that actually puts people in jobs and gives business to other businesses. So we're kind of, but like I say, if a trade deal happens, the confidence effects will be so positive that a lot of those sort of fiscal stimulus won't be as required. And by the way, the Reserve Bank governor could actually not raise interest rates next Tuesday if Trump and Xi come out from their meeting after having a few dumplings really, really happy. I think that's going to be really interesting to watch over the next few days.
Well, show me someone that isn't happy after having a few dumplings. But anyway, Now, let me talk super just quickly. How super is our super? Because it seems like it's been tinkered with by a coalition government for the last two terms. Jane Hume is a new minister. She says it's not really working as intended. Where's this all heading?
Yeah, well, I hope Jane doesn't do many changes. Look, most people don't want any changes whatsoever, but we have to say superannuation has been the gift that keeps on giving. Like this financial year, the balanced super fund is heading towards about a 7% return, and that's fantastic. If you look at the chart since inception, there's only been 3 negative years for superannuation generally for the median fund. So I just think it's been a fantastic gift. I've done a quick calculation. If you gave a 21-year-old $10,000 at their 21st, and they put it in high growth, that's averaging about 10%. By the time that 21-year-old hits 70, it's going to be $1.28 million. I'm kind of ignoring tax, but I'm kind of presuming that you do it as a pensioner in no tax zone. So imagine giving a 21-year-old $1.28 million, but they have to wait nearly 50 years to collect. It's still a great gift. A great gift.
That's not too bad. All right, Peter Switzer, good to see you. We'll see you next week.